Hi, I'm Wayne Cunningham, and welcome to our X Space, where we'll discuss perpetual futures in DeFi. From simple commodities trading, the world of traditional finance developed a dizzying array of financial instruments and contracts. Most notably, futures trading lets someone buy an option to purchase a good at a set future date. Typically, they're hoping that the good will command a higher price at that future date. Crypto trading borrows a lot from the traditional finance industry. However, one key difference is the rise of perpetual futures, which have no set end date. Joining me to talk about perpetuals are representatives from SWI DeFi protocols Bluefin, KriyaDEX, and Aftermath. We'll start with some introductions. Rabeel from Bluefin, do you want to give a brief intro about your platform and what you and your role there?
Yeah, thanks, Wayne. I'm Rabeel. I'm one of the co-founders, and we're building Bluefin, which focuses on derivatives, particularly perpetual swaps. My role is evolving day to day, but my background's in physics, so I help with the formalism and design of our margining engine, and then I work with our investors, our market makers, our partners, as well as support different functions within our team the best I can.
Thanks, Rabeel. And let's go to you, Aditya from KriyaDEX. Can you give a brief intro about yourself and your platform?
GM guys, I'm Aditya. I am also one of the founders of KriyaDEX. Kriya, as some of you might know, is one of the most liquid spot dexes on SWI right now, with close to 30 million in TVL. Our next stage of growth is more focused towards enabling leverage derivatives trading, starting off with Perps as sort of the first instrument. I am more of the non-technical co-founder, so on a day-to-day basis, I mostly spend my time interfacing with quants, tech leads, and designers in the team, trying to bring the whole product together. Currently also working on building a strong marketing and BD team to prepare for scale in the coming years. So yeah, that's about me.
Great. Thank you, Aditya. And let's go to Aftermath with Airtx. Can you talk a little about your role at Aftermath and describe the platform?
Yeah, how's it going, everyone? Airtx here. I do a little bit of BD and help with the on-chain perpetuals product. We have probably 7-8 products here at Aftermath. Some are live, some are currently getting onto testnet. Been building on SWI before I even went on mainnet, specifically to build fully on-chain matching engines.
Great. Thanks, Airtx. And let's stick with you for a minute and talk about how your platform processes perpetual futures and what's the experience like for users.
Yeah, so we're on testnet right now. We already had perpetuals, what we call perpetuals V1 internally, which is a fully on-chain matching engine, kind of a big breakthrough for us in terms of having fully on-chain matching engines. Just in crypto in general, they're very compute intensive and really kind of hard to design to have like an efficient system. Been really lucky with how SWI's consensus enabled us to kind of have a matching engine design that's comparable to off-chain order books, and being able to see the book fully on chain, have all the matches be done on chain, and essentially help build more robust markets. I think that's, as a trader myself, pretty fascinating, and very complex in the sense that we have to focus on not only security of the matching engine itself, but the effective way of making it economical. And I think that building a robust, fully on-chain perpetuals system is very, very complex and tough. And as we've seen, only some chains are able to sustain it, something like Solana. But the effect that we get from storage design, the gas mechanism on SWI is really fascinating. I'm really excited to bring it into mainnet in the next coming months.
Can you speak a little bit to the advantages of having your order book on chain?
Yeah, so there's a few things with off-chain stuff that we believe that if we believe that DeFi is this kind of race to equality, we believe that matching engines, specifically things that that settle orders and kind of match orders, should be fully on-chain and transparent. That means that no participant in this system should have a first look or be able to be first in the queue. And some would say well, what about MEV? And I think that the argument there is we're actually, fighting against MEV by creating more opportunities for people to see the book and kind of build more robust markets since there's more people seeing everything that's going on. It increases censorship resistance. It increases people's ability to not get front run. And most importantly, it allows us to be more hands off in terms of let users and the community decide which markets they want to kind of build. And that is very fascinating. I think that's why we're all here. And very few chains are able to give us this type of performance. And it really comes down to like the consensus model and just how Sweep does gas. And I think that's just so different. And I think that's just very underrated.
I appreciate that. Thank you. And let's go to you, Aditya, about the KriyaDEX. And can you describe how your platform processes perps and the experience for users?
So, I mean, from a very zoomed out lens, if you look at it, perpetuals are primarily a tool for gaining leveraged price exposure to an asset. And how we see it as is like there are four primary components to this flow: trade intent, intent matching, position margining, and P&L settlement. And how we've built Kriya is most of the components here are decentralized and completely on-chain. For instance, the orders are settled on Sui's on-chain order book, deep book. The order book is crankless and completely on-chain. Completely agree to Airtx point there. Like this is just a different form of MEV where everybody is able to see the order book and there's sort of no front running or people partially matching the orders then transferring into the final order book. We also have a custom mark pricing oracle that makes things more transparent. However, like keeping the risks of financial leverage in mind, we release new functions and ease trading rules incrementally. For instance, V1 would have 20x isolated margin USDC settled contracts. V2 will have cross margin, cross collateral support. V3 will have a bunch of more degen features. We'll introduce maintenance margin limits, increase them, but that we'll do only once we bootstrap like a solid liquidity base, a big enough insurance fund to support more pairs and volatile market days. Essentially, we'll have to see how the system handles stuff like liquidation spikes, funding rate accuracy in low volume pairs, auto deleveraging, etc. But as far as the infra on Sui is concerned, I think this is one of the few chains where an on-chain order book is actually practical in building. I mean, we tried a bunch of EVM chains before we came here. We tried even loopring and different L2s, whatnot, because we wanted to stay closer to the EVM liquidity. But I mean, here it's possible to actually build a decentralized on-chain order book because of basically Sui's consensus mechanism and the high TPS it can support. And also like why we particularly built on Sui was the security of move, like given the recent Kyberswap hack, right? We saw like even in the best of the blue chip EVM protocols, there is a possibility of reentrancy. And with leveraged instruments, security is key. So yeah, that's pretty much like how our flow works. We've kept most of the components decentralized and we'll slowly see how it compares to like places where some things are off chain, some things are on chain. Yeah.
Right. And of the user features you mentioned, because user features are really going to be your differentiating factor, which would you say is the most impactful or the strongest one that you offer?
I mean, first of all, pulling everything on chain with an order book is also a key differentiator. Like if you see on the EVM side, only GMX or Gains networks are a few dexes that are completely decentralized, and that too is also arguable that like they have keepers and all. Plus the price discovery happens just via the oracle. There's no native price discovery. And all the dexes that have native price discovery like DYDX, etc., till now had an off-chain order book. So this itself, we believe, is a key differentiation. And later, I mean, we can segregate the user experience into two parts, essentially capital efficiency and UX. So on the capital efficiency side, we are working on increasing the maintenance margin limits, increasing cross-collateral support. Like initially, we'll have just USD margin contracts, but we'll try to bring in BTC margin, ETH margin, SUI margin contracts pretty soon. So that is there. Plus, we have sort of a bunch of like vertically integrated features that will help like bring in more taker liquidity. For instance, like I previously started up before this also. I was building a retail broking app in India. So my experience is pretty much around how to make trading easy for retail. So we'll release a bunch of features around copy trading, market making vaults for retail. So essentially, market making on an order book for a retailer would be as simple as just Uni V3 LP, something like that. So yeah, basically some features around capital efficiency, some features around UX. The UX features will mostly enhance taker liquidity, and the capital efficiency will help the makers come on board. So yeah, that's the
Great. Thank you. And let's move on to Bluefin. Rabeel, can you talk a little bit about how Bluefin handles perps and what's the experience like for users?
Yeah, for sure. We've been live for a few months now with an early version and have already processed a high level of scale. So we crossed, for example, 400 million in volume yesterday alone. We use an order book and an on-chain margining engine. So that is responsible for validating signatures, collateral, risk before executing the orders and transfers of balances. We've built on the premise of remaining non-custodial from the start. So users don't have to take the same security risk with their assets as they do on a centralized exchange. And now are working towards complete decentralization and permissionless markets by the end of the year, with rolling releases coming along the way.
Great. And let's stick with you for a minute and talk about, you mentioned volume. Can you talk about how popular perps have been on your platform?
Yeah, I think it's still early days and it's still an early version of Bluefin with a few markets. But it's still exciting to see that we've, on average crossed $100 million in volume for the last 2 months and are at a similar scale to GMX and a few others in other ecosystems. And so I think it's great early traction, and we're just excited to release the next version of our protocol and keep building from here.
I know Bluefin specializes in derivatives. Are perps a portion of those, or is everything a perp?
No, so perps are the initial phase of our launch. We will be introducing more financial instruments, including spot, and then we're also looking at options.
Great. And I guess, the perp process is pretty interesting because I guess people can take both sides of a position. You can short it or long it. Can you describe that a little bit?
Yeah, I think perps are really popular for a few reasons. One, they're a lot cheaper than spot assets. So for example, many centralized exchanges, it costs about 10 bips to trade the spot asset, whereas it costs about 4 bips to trade the perp. It's usually a lot more liquid. So you can execute larger orders better. And then you can take levered exposure on both sides. So it's a lot easier to be able to go short, which allows users to hedge and also, take a bet on the other side.
Great, thanks. And let's go to you, Airtx, about and Aftermath. I think you mentioned that perps are still in testnet phase on Aftermath. Can you describe how that process has been going, getting everything working?
Yeah, no, we've learned a lot in already Perps V1, and we made a couple breakthroughs in terms of this matching engine design that we've been working on. I think it's important to note that what separates SUI from everything else is that SUI sequences access to the same shared objects rather than the transactions themselves. And so building this matching engine has been, able for us to make everything, more optimized, especially accessing memory and computation operations. So that's what we've been doing for the last 2 years, but especially the movement between Perps V1 to Perps V2 has given us probably 4 to 5x more throughput throughput in terms of orders being matched. And that, again, as someone who's loved this stuff for many years, is super exciting because this is all happening on SUI using SUI's consensus. So just from the testnet phase, it's been pretty remarkable in terms of just getting this type of capacity that we just haven't seen anywhere else.
You mentioned, 3x and 4x throughput. How have those stress tests gone? Have you really pushed the system to the limit? Can you comment on TPS or anything?
Yeah,
like that?
So it's orders per second. It's difficult to comment about orders per second because it's not straightforward. But essentially, what we're talking about is we could scale today, not even when Mississippi comes out, but today, the level of how many machines you could throw in the network, and that's how much more throughput we can get per market. So you could, again, very, very simple, very simple design. You can see upwards of over 2,000 orders being matched per second on chain at any market. And again, these are, not limit orders. Like there's different types of variable. Like, we're seeing upwards of that number. And it's like pretty insane to think about this is all happening on Sui. So yeah, I mean, things like that is, me personally, has been pretty impressive to see, and just shocked that like this is actually possible, because this 2 years ago was just a dream, to be completely frank with you.
Yeah, that's great. That's, we
This space was downloaded via spacesdown.com. Visit to download your spaces today.
I was there when Miston was developing the not early days, but relatively early days. And there's a lot of promise about the platform, and it's just amazing to see it work out in production. And that's obviously the real test. Aditya, I want to go to you on KriyaDEX about. Can you talk about how popular perps have been on your platform?
So Kriya's perpetuals are also not live on mainnet yet. However, we did an incentivized testnet for 2 weeks in December. That saw close to 50,000 transactions being performed by about 1,200 odd users. And like given our 7-day active users on the spot AMM are around 3,000, 4,000 right now, seeing that almost half of them tried out perpetuals is a sign of like good demand from even the retail side of things. And yeah, as Airtx mentioned, like TPS is tough to quantify because there are many things happening under the hood. People are placing market orders, they are matching with multiple limit orders, stuff like that. And mostly this perpetual testnet phase was to habituate people more with the UI, get their feedback on like what's working, what's not in terms of the manual orders. So we didn't get to experiment with a lot of traffic spike yet, but that we have done some internal tests, seeing some good numbers. But yeah, don't want to promise on the testnet stats. So we'll have a phase 2 of incentivized testnet 2, probably early Feb. So that's when, like, let's see, that's the plan where we'll run a lot of bots, see how much gas surge happens. And let's say even at a scale of 1 million wallets, are we able to deduct funding rates or not, stuff like that.
It's impressive. And I want to pivot a little bit, Aditya, about KriyaDEX. And obviously you're putting a lot of resources behind supporting perps. So you've seen popularity in the industry for them. Can you comment on why you think perps are so popular in Web3?
Yeah, so honestly, I think there's no one single reason why perps exist in crypto and not in TradeFi. It's maybe a combination of multiple things. I mean, correct me if I'm wrong. So one is the history. So BitMEX introduced perps for the first time in practice, and they straight away introduced them in crypto. So perps came for the first time in practice in the world in crypto. There was some theoretical papers, but or of how to do it in TradeFi, but no one implemented. Second, I think, is maybe the demand. Like for any futures instrument, there are two components. Speculate on the price exposure, or either hedge for some event risk on some particular day. So like for commodities, I usually buy a dated future, assuming like in my supply chain, if something goes wrong, some sort of blockade happens, I am safe against that risk. So dated futures as an instrument in TradeFi are used mostly to hedge the risk of the underlying asset or to take physical delivery. And in crypto, it's all magic internet money, right? So there's not much concept of physical delivery. People mainly want the leverage part of things. And given the market is 24/7 and auto rolling over futures, that's what a perpetual is. Basically, every 6 hour and expiring futures is a perpetual, right? So there was more need for crypto in there. There was more PMF. Then it got introduced here first. That's why I guess perps exist more in crypto and not in TradeFi. Like I've heard of some examples, like in Southeast Asian markets, maybe in Hong Kong or Singapore. They've tried 1-day expiry futures on some commodities, but it didn't work for some reason. Maybe the clearing processes, etc., and TradeFi are too habituated to the T+2 settlement, etc.
Great, thank you. And Rabeel, let's go to you. Can you talk a little bit about the popularity of perps on Web3 as opposed to traditional finance?
Yeah, I think Aditya, generally covered most of the points. I think the other piece is that, perps use funding rates to converge to the underlying, which usually helps keep them very, very closely tied to the underlying price. And then, given that they're more liquid, cheaper to trade, you can go long and short, you can take leverage. I think these are the elements that have, taken them off. And then also, I think you can trade crypto 24/7. So just having an instrument that's super liquid, converges to the underlying price, and is very easy to trade is really why it's become, crypto's most popular financial instrument.
Now, I know with supporting your position on a perp, you have to keep the funding rate going. Is there a point in the future, like maybe 1 year, 2 years, where it just becomes ridiculous to keep your position when the price isn't going to change enough to compensate for the funding rate?
I think with funding rates, it's just really a function of liquidity and having enough market makers, I guess, quoting on the order books. If it is competitive up there and they're quoting, its funding rates are going to be very, very small. And I think based on market movements, if it's super volatile and it's going in one direction or the other, over time, the goal should be that it's very minimal. And that's what we're working towards. And if you use Bluefin today, we have a very tight top of order book. It's about one tick wide a lot of the times. And our funding rates, especially in the core markets, are very, very small. And that's kind of the goal that we have been working towards, over the course of last year.
Great. Thank you, Rabeel. Airtx, you've got a lot of experience investing in crypto. Can you talk about the popularity of perps?
Yeah, no, I am, personally very cynical. I think that, with there have been a ton of hacks, especially in pool 2 and people farming. I think more and more people have switched over to basically trying to, get leverage on whatever they want, whatever they want to trade or, whatever it is. I usually just call it trading vapor. But, people are looking for leverage because it is a similar way of kind of degenning on whatever they want, whatever they believe is going to go up. So instead of farming, where you have this risk of smart contract risk, especially on something like Solidity, more and more have switched over to kind of, leveraging up using perps. And I think that was another reason what we wanted to build what we want to build. We want to give access to perps that are, not only ones that are listed on centralized exchanges, but ones that are not on centralized exchanges. That's where, the on-chain kind of matching engine and these on-chain vaults, market making infrastructure that we built is to get those people on our platform. Because we think that's where a lot of the volume, like real organic, real retail volume is coming from, is those types of users. So that's what we have been very, very focused on.
Great. Thank you. And let's stick with you for a second. I want to pivot again to really the technology underlying everything. We've talked a lot about Sui's consensus processing, the fast transactions. Can you talk about the Sui technology or what some Sui technologies does Aftermath really rely on?
Yeah. So being on chain requires us to rely on everything. The biggest issue when it comes to, building these things is obviously gas, gas efficiency and, being able to create a economic model of having users pay for gas and whether, what happens and makers paying for, makers always have to keep paying for gas. The fact that the storage rebates is absolutely one of the biggest game changers, I think, of Sui, makes me think that it's just super misunderstood, is that when you delete something from the chain, you get a gas rebate. And more often than not, that gas rebate could, especially during times of volatility, and we love trading during volatility, that's where most of the money's made, could be more than the original transaction itself. So you kind of can create this flywheel where you can get natural makers without incentives to trade and being able to cancel orders, get paid for that, and then re-add orders. And it creates this kind of flywheel that I personally just find really fascinating, and just you can't do this anywhere else. That again, the sequencing of the objects, I think, is also another game changer. It doesn't exist anywhere else. And that allows us to create these markets that you can parallelize against each other. And that is just so, again, from a design space, from designing this stuff for 2 years and seeing everything else, doesn't exist. And the other thing I want to mention, I mentioned before, we were talking about TPS. I think when we talked about perps, especially order book based, not AMM based, is we want to talk about orders per second, not TPS. I think orders per second is more relevant here. And achieving something like, like I said, just let's say 2,000 or whatever orders per second is much more insane to think about. I know it sounds less, but it's bigger to me of a number than saying, oh, we're doing 150,000 TPS, because we're essentially saying we're matching 2,000 people together in a second. And you can scale that. And that's like, just from a derivatives, seeing everything, that's just insane to me personally. And that's what makes me really excited.
Yeah, I agree. I mean, orders per second is really where the rubber meets the road. That's the user experience and the number of users you're getting through your system and your platform. So that makes a lot of sense as a metric to look at. Rabeel, I want to go to you to talk about what specific Sui technologies really make Bluefin work.
Yeah, for sure. I think the consensus mechanism generally, as we've spoken about, and soon we're moving to take advantage of Sui's own objects. And the key thing over here is we'd have about 400 millisecond finality that will improve user experience significantly. There's a detailed thread that Chaos Labs wrote about it yesterday. If anyone wants to delve deeper into what this means, I think it's both on their social and our social. Apart from this, we're actually also excited about a lot of the account abstraction work that Sui has been putting in and building out. Primarily, there's ZK login, and we're currently building a wrapper on top of it. So in 2 weeks from now, people will be able to use Bluefin with just a Google account that's secured on the backend by ZK login. We're obsessed with user experience, and while it's still early on Sui on some of the fronts like bridging, we think a lot of the right effort and right priorities have been placed on making it as easy, making the network and the protocols on top of it as easy as possible to use.
Yeah, bringing more people into this technology is incredibly important because there's so much potential. Talk about total addressable market, it's in the billions. Let's move on to Aditya. If you want to talk a little bit about the technologies you've been working, or that your team has been working on to make KriyaDEX work.
So initial reasons why we picked Sui was because of move security and the consensus mechanism. But in retrospect, one benefit we've seen of building on Sui is the superior on-chain tooling Mishton keeps building post-mainnet. As Rabeel mentioned, ZK login, and with the bridging being dependent on wormhole previously, now there's a native Sui bridge coming as well. The gas sponsorship mechanism is at the chain level. So these are some benefits of Sui we are seeing. Then mainly like our core perpetuals protocol is built on top of Deepbook. So we currently use Sui's on-chain public good for matching or price discovery in our protocol. So that is one major benefit. Other is, I'm not a very technical founder, but what I keep hearing from the dev team is the smart contract writing has been modularized and made very easy with dynamic fields and the object model. They can write complex settlement and margining contracts with relative flexibility. Lots of UI integrations / batch operations have been made easy via something called programmable transaction blocks. So essentially you can batch operations together and execute them together on chain. So that makes a lot of stuff easy for us. So yeah.
Yeah, part of programmable transaction blocks, that's like a key Sui primitive that lets you just batch things and make the whole processing way more efficient. Aditya, I want to stick with you for a second. We're just about at time here, so I want to give some closing thoughts here. Can you talk, give any final thoughts and possibly talk about any future features that you're looking to implement in the next year?
So yeah, like in terms of features, what we are thinking is to lower the transaction cost from the taker side or the gas fee side. We are thinking of introducing Shinami gas station to sponsor fees or build a market for that in the background. We are thinking of adding a keeper layer, but most of the transaction cost part is solved for by Sui's consensus and low gas fee. In terms of reducing the liquidity cost, as in the maker fee or the spreads, we are thinking of introducing market making vaults for retail, thinking of a market maker program that will closely be associated with our token launch also, but we'll have to think through it given we already have a spot DEX. So how the governance token aligns with both the spot DEX as well as the perpetual DEX, that's something we are closely thinking on. Then in terms of there are a bunch of vertically integrated features we've thought of, for instance, in AVO, you can see there's yield on idle margin. So if your USDC is kept in your margin account, you at least keep earning interest on it till a position is not open. Some things around copy trading, hyperspace, Hyperliquid has really good feature called community vaults, where people can build their own hedge fund basically on chain, and people can copy their trades or invest in their fund that is used to trade on the DEX, stuff like that. And to bring in more institutions, what we are thinking is like adding functionality for block trading or off order book settlement, custom margining for P2P orders of verified market makers, stuff like that. And yeah, in terms of final thoughts, nothing much. Like, thanks a lot, Wayne, for Sui Foundation for putting the space together. Thanks for the listeners for their time. And for our spot users, stay tuned for Kriya's Chakra campaign season 2. And for the ones awaiting Perps, the audit is in progress. We are trying our best to launch in Feb. But yeah, there are a lot of risk associated with synthetic leverage. So yeah, we are trying our best.
Great. Thank you. And Airtx, do you want to give some final thoughts and maybe some future possibilities for Aftermath?
Yeah, no, really excited to finally get this onto mainnet. We've been building for a long time. We also built the Elixir integration for the whole chain, not just for us. So we're really excited about bringing those kind of experiences to Sui, just getting more liquidity in there. Yeah, I guess to sum up, I think the reason why, we are excited the most to being on Sui is we want to offer the most diverse markets, the most transparent markets, and ones that create the feeling of user experience, since we have all these user experience tools like ZK Login and making it easy to sign up and have retail be involved, transparent. We don't want a Citadel situation with Robinhood. We don't want institutions or market makers to front run or being able to see the book somewhere else, some AWS system. We are here to make sure that we are the most censorship resistant and fairest access to markets we can build. And that's, as a trader, as a DGen, and someone who's really involved in DeFi, I'm really excited to see Sui actually getting that kind of opportunity to showcase all the amazing all the amazing technology that we can incorporate to building all this.
Great, thank you. And let's give final thoughts in closing to Rabeel, if you want to talk a little bit about what might be in the future for Bluefin and any final thoughts about Perps on DeFi.
Yeah, for sure. I guess, we currently have a few priorities that we're building around. An easier user experience via secure account abstraction goes live by the end of the month. Performance and margining engine upgrades with Bluefin V3, the token, the DAO, permissionless markets, and full decentralization of our stack. And then finally, I think, some of the others we're talking about, vaults for market making, Elixir, which is a great team, it's Aftermath was also talking about, will be launching on Sui and Bluefin on Feb 7th. So that's right around the corner. And we're super excited, what this will enable.
Great. Thank you, Rabeel. And thank you, everybody, for joining us today for this session. Look forward to future sessions. We'll be conducting these on a weekly basis, and we'll be announcing our next one very soon. Thank you very much.
Thanks a lot, guys. Bye-bye.